You can basically capture most of the returns just by being in Bitcoin, ETH, Solana. Don't overtrade, don't use leverage, don't FOMO, following your friends, looking at a trade you missed out, and just calmly let it play out.
Solana has been making waves in the cryptocurrency world with its ultra-fast transaction speeds and low fees, attracting enthusiasts and investors alike. Launched in 2020, Solana's unique hybrid architecture sets it apart, with an impressive 5,000 transactions per second. This speed is powered by its innovative proof-of-history consensus mechanism and turbocharged Syllable transaction processing engine. Solana's benefits translate into real-world benefits, including reduced transaction fees, improved user experience for decentralized applications, DApps, and scalability for future growth. Solana's potential lies in its scalability and developer-friendly ecosystem. Its ability to handle thousands of transactions per second positions it as a pioneer in widespread adoption. Additionally, Solana provides developers with robust tools and resources to create innovative solutions across various industries, promising real-world use cases and attracting investors. When considering investing in Solana for 2024, it is important to look at its performance over the past few years. Since its launch in 2020, Solana has seen notable growth, especially in 2021, when its price jumped over 9,000%. Solana's price history reflects its rapid rise. It started at 75 cents in April 2020 and reached an all-time high of $249.823 on October 31st, 2021. In today's video, we will tell you about Raoul Pal's view on Solana and why he is super bullish on Solana in 2024. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Once again, the business cycle is something that many of you should learn about if you are not familiar with it. This is how macro specialists invest. It involves using the ups and downs of the economy to help us predict asset price movements. There is a firm belief that this will take a year or two. Macroeconomic outlooks always require a business cycle framework, because that's really what gives us strength in trading. And I'll come back to secular trends later because they're important too. But the business cycle is made up of the ups and downs of the economy. Central banks live in the past. The data they are still analyzing is behind schedule. Therefore, they are 6 to 8 months behind schedule, which explains why they are still at the highest level of tightening while the economy is at its lowest point and risk assets are rising. Things can go wrong, but we firmly believe that the next 2 years will unfold. First, macroeconomic outlooks always require a business cycle framework because that's really what gives us strength in trading. And secular trends are important too. However, the business cycle is made up of the ups and downs of the economy. Central banks live in the past. The data they are still analyzing is behind schedule, therefore they are 6 to 8 months behind, which explains why they are still at the highest level of tightening while the economy is at its lowest point and risk assets are rising. Many assets simply follow the economic cycle. This weak economy is the reason we have a weak Russell 2000. The Nasdaq lives in the future, and that's why it's strong. There is nothing strange about the dichotomy between these cyclical societies and those with a secular tendency. They still have this time gap. This is not a broken market structure or a bubble. It's a bubble. It's just normal. It is normal for the Russell 2000 to live in the current ISM. It is cyclical. Crude oil itself, has been weak because the economy has been weak. Crude oil does not predict the economy. What it does is reflect the current state of the economy. All assets are essentially correlated. It's all part of the same cycle. Some things lead, others lag, and that means you get almost no diversification in your portfolio. They are all the same. Whether you choose emerging markets, commodities, technology, or cryptocurrencies, it all depends on the economic cycle. So, you can also choose most. And these things are also done risk-adjusted. Secular cycles, when one understands them and captures them at the right point in the business cycle, become explosive. It outperforms any other trend and adapts better to financial conditions. It is more influenced by the business cycle than any of all others. Crypto. And as you know, the economic cycle peaks at the end of 2025. This suggests a crazy goal That could generate between $500,000 and $1 million in Bitcoin. We are waiting for it? Probably not. These cycles can be crazy, and this one looks more like the 2016 to 17 cycle than the previous cycle. And there hasn't been much impression from central banks this cycle. Or not in the United States, but central bank balance sheets were growing. We saw 20% growth, and what happened with liquidity was the explosion of cryptocurrencies. The question is, will the technology be adopted more in the coming years? Most people would agree that this will be the case. However, most people stay away from this trend. They don't want to believe it's expensive. In the meantime, this is the best trend people have ever seen. Catch the trend. This suggests that the Nasdaq would be between 25,000 and 30,000 at the end of this cycle. There is no point in owning other stocks in this world where everything is correlated. If you want to beat the Nasdaq, buy the semifinals. If you want to get past the semifinals, buy the exponential age basket. It's as simple as that. Crypto is the horse that everyone supports the most. The fastest horse in the race. Best risk-adjusted returns and high correlations with this global liquidity index, which is our code for everything. So we know how asset prices behave, giving us a competitive advantage using our proprietary frameworks. Bitcoin is just a macro asset. All the noise you see in the Financial Times, all the newspapers, all the media, even the noise on Twitter, even the detractors, is magic money on the internet. It is magic beans. They are all wrong. Bitcoin is a macro asset like everything else and operates from the same liquidity, business cycles, secular trend, global M2, fabulous correlation, Bitcoin. We use it all the time to hit the November low from last year. This is going to continue, so this cycle should continue to expand, and we will get incredible rates of return because the year-over-year growth rate will start to explode. When liquidity conditions emerge, cryptocurrencies outperform tech stocks, and this is due to the structure and incentive systems built into a tokenized ecosystem where you own part of the underlying network and get paid for adopting the network. Some stocks may look like Bitcoin. We looked at Nvidia, for example, and it ends up looking a lot like Bitcoin, but the index as a whole will still underperform. This is why we are so strongly represented in the crypto space. In the macro spring of cryptocurrencies, Bitcoin always outperforms. Just as in the macro spring, treasuries tend to outperform credit. Later, when we hit macro summer, ethical alternatives, first Solana, others will start to vastly outperform Bitcoin, just like junk bonds outperform treasury bonds. So Ethereum is simply doing what it's supposed to do, but that doesn't surprise us much. This year, it's the story of Solana, which I've been around all year, and Bitcoin, which made Barbel the best exchange in the world. Owning Solana has been the best deal in the world, bar none. But Ethereum will catch up. It will be okay. As liquidity increases, alternative assets end up vastly outperforming. We are at the beginning of altcoin season, and we are seeing signs of it everywhere. DeFi has been very successful. It seemed like DeFi was also the first cycle last time. There was a Solana in small groups. It was a variation that worked very well, but we still haven't reached 50%. Once we start to reach 50%, things get crazy, and everything that awaits us ahead also increases. Basically, you can capture most returns just by being in Bitcoin, Ethereum, Solana. Don't trade too much, don't use leverage, don't follow your friends, and don't watch a transaction you missed. Stick to the program. Maintain your trade, add and sell. Anything over 20%, add it and let it sit quietly. Don't trade too much. Don't try to hit highs. Buy, you will miss out. We saw everyone do it. Stick to the program. Keep a cool head, maintain it, and keep it in your ledger. Don't let your trade blow up and take it away from you. Your job is not to part with your coins until 2025, especially towards the end of 2025. That is your only job. That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.